right, so welcome to today's class. And in today's class, we're going to be talking about chart patterns. Okay, we are really diving into the heart of technical analysis. Okay, chart patterns. Okay, so let's just dive into what we have for today. Now, to be a price action trader means having a deep understanding of the various different price action patterns that form in the market. The problem with this pattern is that because there are so many of them that form in the market, knowing which ones you should take the time out to learn and which you should leave can be quite challenging. To solve this problem, I thought that today I will give you a list of what I believe to be the most important price action patterns you need to learn as a forex trader. All right. Now, price or candlesticks, which shows price movement on its own, form different types of patterns on the chart. They move in different types of ways, all right? So they get to form different kinds of pattern on the chart. Now, it will almost be impossible for you to master or learn all of them, all right? But then I'm going to be showing you chart patterns that you should know and take note of, all right? I'm going to be showing you important price action patterns that you can actually trade as a trader, all right? Now, as some of you reading this will probably already know, there are three basic types of patterns that can form in the market, all right? So there are three basic types of patterns that can form in the market. We have the action, price action reversal pattern. We have the price action continuation pattern, and then we have the price action candlestick pattern. All right, now we've already talked about price action candlestick pattern in the previous classes. All right, so in this or in subsequent classes to come, we're going to be talking about um, reversal patterns and continuation patterns. All right, now I will begin today's article by first showing you what the most important price action reversal patterns are, followed by which continuation patterns you need to have. Okay, you need to have knowledge on. And finally, I will show you the two most important price action candlestick patterns you need to watch out for in the market. All right. So basically, in today's class, we're going to be looking at the most important reversal price action patterns that you should actually pay attention to. Okay, and then in other classes to come, we're going to keep talking about maybe continuation patterns and then price action candlestick patterns. All right, so let us keep on going. Okay, let's keep on going. Now, what are chart patterns? These are basically unique movements that candlestick make on chart. When we get to see this unique pattern form, we could predict future price direction with them. Chart patterns naturally occur and repeat over a period of time. All right, now you must also note this point about chart patterns, or you must have it at the back of your head when you are uh, planning to trade chart patterns. Okay, now price action patterns occur over and over and over and over and over and over again. All right, basically, I told you guys that price action or technical analysis is basically you using historic price data to actually trade to actually trade or predict future price direction. All right, so when it comes to chart patterns, you have to understand that these patterns have happened before. That is why we're able to identify them. So they will always happen again and again and again. All right. So have it at the back of your mind that chart patterns will occur, should I say 1,000 times, but then they are actually going to get to occur lots of times. Now, you must also understand that price action patterns can occur on all time frames. They occur on all time frames. You can see them on the 1 minute time frame, you can see them on the 5 minute, 50 minutes, 30 minutes, 1 hour, 4 hour, and daily and weekly. Okay, so they get to occur on all time frames. All right. Now, price action patterns, sorry, can either signify price reversals or continuations. Okay, so have this information at the back of your mind. Now, let's look at what price action reversal patterns. Now, the first price action reversal pattern we're going to be talking about is what the head and shoulder pattern. All right. Without doubt, one of the most popular and well-known price action pattern in the market is the head and shoulder formation. Okay. Now, the head and shoulder formation is one which all price action traders need to memorize and understand if they want to become good at spotting reversals using price action. Okay. So now, if you actually want to be good at trading reversals, then you should actually learn the head and shoulder pattern. Now, as you have probably already guessed, the head and shoulder pattern is a reversal pattern which has a swing structure very similar to that of a person's head and shoulder. That is why it is actually, should I say, nicknamed head and shoulder pattern. All right, because you get to see a head and then you get to see what, two shoulders. All right, now the pattern comes in two variations. The one we just looked at in the image above is referred to as being a bearish head and shoulder pattern, which is a signal that the market may reverse to the downside. Whilst the one I'm going to be showing you in the next slide is the inverse head and shoulder pattern, which actually moves or shows a reversal from a bearish market to a bullish market. All right. Now I'm going to hold another class showing you guys how to trade head and shoulder patterns or how to generally trade chart patterns. But then in this particular video, I just want to theoretically explain and teach you about chart patterns. All right. So now this is a head and shoulder pattern, and it's actually called a head and shoulder pattern because it looks more like what, like a human being. Okay, some abstractly. Okay, we have this high over here, which happens to be the head, and then we have the shoulder on the left and that shoulder to the what, to the right. Now this looks to be a head and okay, two shoulders. So it's a head and shoulder pattern, and in most cases it shows that okay, a bullish market will most likely turn bearish. All right, now let us move on to the next. Now this is the inverse head and shoulder pattern. Now the inverse is just another word for or opposite. Okay, so it is just the direct opposite of the previous chart pattern we just looked at. All right, so the inverse shows that okay, it's a reversal pattern that says a bearish trend will most likely turn into a bullish trend. Now, here, what an inverted head and shoulder pattern looks like on the chart. All right, you can see that all the features of the pattern are the same as the bearish version, only the opposite way around. Instead of the head pointing upward like it does with the bearish pattern, it points downward here. Same with the what, with the left and the right shoulders. All right, now the only difference between the two patterns is in what needs to happen in order for the pattern to become invalidated. All right, now in all the head and shoulder formation, it's usually quite a reliable signal. Okay, because over the time of trading chart patterns, head and shoulder, whenever you see a head and shoulder pattern, you should be careful. I remember sometime around, I think if not mistaken, it should be ending of last year. All right, when we had Bitcoin fall from $65,000 to over 19K. Okay, now when I went back to check that chart, I noticed that a head and shoulder pattern formed on, should that be the daily or the weekly time frame? But I think we had a head and shoulder pattern on one of those time frames. So you can see that from such bullish move, if you had the knowledge of chart patterns, you would have not been affected with the Bitcoin dip. All right, because the fall in Bitcoin price made a lot of people lose money. So if maybe if parameter, let's say you had prior knowledge about chart patterns and technical analysis, you wouldn't have been caught by surprise. All right, the moment you saw the reversal pattern, you that, oh, something tricky is going on with BTC, so I need to take out my money. All right, and then you take out your money, and you will have actually been saved from that huge price surge. All right, so now, like I was saying, okay, the head and shoulder is actually a reliable signal when you are looking at trading reversals. All right, if you want to learn the best way to trade the head and shoulder pattern and get a more in-depth look at the way it should form on charts, I'm going to be making a video next, all right, on how you can actually trade these live on your charts. Okay. Now, like I said before, this is just more like a theoretical part of this video, all right. So just follow me gradually. In the next video I'm going to be dropping after this, I'm going to be showing you how you can actually trade, how you can get into a trade using the chart patterns. All right. So then let us keep on going. Now, the next pattern we are going to be looking at is what, the double bottom. Now, personally, I love this pattern because this pattern has personally made me lots of money. All right, the double bottom has made me lots of money. Now, the double bottom and the double top formations are another couple. Okay, so now the head and shoulder pattern and the inverse head and shoulder are more like a couple, a husband and wife. Let's say the head and shoulder is the husband, and the inverse head and shoulder is the wife. So same thing here with the double bottom and the double top. All right. Now, the another really important reversal pattern that you need to be aware of. Okay, now there are two patterns which get their name from the way the market will make two down swings with swing lows at similar prices to one another before reversing. In the case of the double bottom pattern, or two upswings with swing highs forming at similar prices to one another before reversing. That is in the case of the double top. All right, so in the case of the double bottom, the price will actually make two what down swings. Okay, so you're gonna see one swing low, another swing low. So now this is a double bottom pattern. All right, this is a double bottom pattern. But then in case of a double top, which I'm going to be showing you next, all right, but then in case of a double top, you're going to see two swing highs. But now this is a double bottom, so just just relate the name with what you're seeing on the chart. A double bottom, so this is one bottom here, this is the second bottom. So this swing low here is the bottom, this, so both of them make double bottom. We also have the triple bottom chart pattern, all right, whereby you get to see this form three times, one, two, and then the third one, all right, three. Okay, so now this is a double pattern, this is a double bottom reversal pattern, and this signifies that okay, a bearish move is coming to an end and we are looking to reverse to go bullish. All right, now you can see the first part of the pattern forms after the market makes a downswing followed by an upswing. All right, so price makes a downswing followed by an upswing. Swing low that forms at the bottom of the swing higher is one of the two bottoms that forms during the pattern. The next swing low and bottom will always end up forming at similar points to where the first swing low has formed. All right. So basically, what it's trying to say is that these swing lows should not be far from each other. They should not be too far from each other. One should not be so down and then the other one should be up. No, they should almost be equal, if not equal. All right, they should almost be equal. All right, and then in most cases, this pattern gets to resemble the W, the letter W. All right, so you can see this happens to be the first leg, second leg, so it gets to resemble letter W. All right, so let us go on and look at the double top. Okay, now looking at the double top, all right, it makes what, two swing highs. Now this gets to look like the letter M. Some people can actually refer to the M trading strategy, the M trading strategy. All right, now overall the double bottom and double on the double top patterns are two decent reversal formations, although they can be quite difficult patterns to trade effectively due to the way the swing seen after the second bottom or top has formed can easily turn into a retracement or consolidation soon after you have entered the trade. Okay, but then for now, understand that a double top and double bottom are examples of reversal patterns. Okay, have that at the back of your mind. In the next class, like I have been saying, I'm going to teach you how you can actually enter trades effectively using these strategies. All right, now the next pattern we're going to be looking at is what, the rising wage. I personally love this chart pattern because I have traded it a lot of time and it works. Okay, it has also made me money just like the double bottom has made me money. All right, now the final two price action reversal patterns we're going to be looking at are the rising wedge and the falling wedge. Now, just like the head and shoulder and the inverse head and shoulder are more like partners, the double bottom and the double top are also like partners. And then now the rising wedge and the falling wedge are also partners. Okay, as you can see, at the beginning of the wedge, the distance between the market hitting the upper wedge line and the lower wedge line is quite large. As the pattern progresses through, the distance between the line becomes smaller. Now, um, okay, let me not really go into mathematics in school to explain this, but then you should just know that as price keeps trading, the triangle looks like it wants to close. Okay, it looks like it wants to start forming a triangle. Now this is the shape. Okay, you do not have them as straight line. No, they are going towards meeting each other. So as price moves, the wedge begins to close. It begins to close. That is how a rising wedge forms. And then just when it's almost at the peak, you notice a breakout, and then that is when you get to look for entries. I'm going to actually teach you this in the next video, but then that's just a clue of what we're going to be talking about. All right. So you can see that at the beginning of the wedge, the distance between the market hitting the upper wedge line and lower wedge line is quite large. As the pattern progresses through, the distance between the two lines becomes smaller and smaller until eventually the two lines are really close to one another. And then at that point is where you actually have a breakout and then you get entries. All right. So now let's look at the twin brother to this pattern, which is what, the falling wedge. Now the falling wedge, okay, it looks just like what you see on your chart. All right. Now, in this image, we are looking at an example of a falling wedge pattern. The falling wedge is the bullish version of the what? Of the wedge pattern. Now, in this falling wedge pattern, it shows you a reversal from a downtrend to an uptrend. Okay. Now, in the rising wedge pattern, it shows you a reversal from an uptrend to a downtrend. Okay. So you have to understand and have an image of these patterns already. Okay. It forms in much the same way as the rising wedge. The only difference right here is that the swings contract to the downside rather than the upside like they do during the formation of the rising wedge. All right. So basically, if you notice something, these patterns are just the inverse of the other because one tells you when you're having a reversal from bullish to bearish, and the other one tells you when you're having a reversal from bearish to bullish. Okay. So that is it. Now, in closing, okay, the rising and the falling wedges are two patterns which are important for you to be able to recognize on a chart. Okay, so all these patterns I've actually taught you in today's class are important when it comes to you trading reversal patterns. All right, you can get to do your own research, of course, you should. You can get to do your own practice on your chart, very much important. All right, so I'm gonna see you in my next class. All right, and then until then, I wish you a happy learning, a happy trading, and anticipate the practical session. All right, so bye.